Hi, this is Paul from globaltradingsoftware.com, and this is a Forex breakout trading tutorial. We're day trading Forex and we're looking for certain breakouts of ranges that form at certain times of the day. So the European Gold Pit open at 8 AM European time and the London Stock Exchange open as well. So the software that we use is the xBrat range breakout trading indicator. This is a trading view platform version, but it's also available for lots of other platforms, and the links will be down below in the description. We're also going to be using the manager to manage the trades, and then we're going to be using the BIAS Depth Heatmap, which you can see at the bottom here, which looks up 6 time frames, the lowest time frames at the top, the higher time frames at the bottom, and it gives you that the depth of the bias, whether it's bullish, bearish or neutral. So this is European Japanese yen. Again, anything connected with the euro and the European morning good Forex trading pair. So we're looking at the European Gold Pit open. The indicator defines that range, and we use the 10-minute time frame for Forex pairs. Defines the range, but also gives it a bias for the range. So the bias is red, so we're only looking for short trades. The actual the tag is coloured red as well, so if it was bullish it would be coloured green. Then we look down at the BIAS Depth Heatmap, and we're all red. All 6 time frames are red, so we have the bearish bias that's indicated with that range is in depth is also bearish as well, so we're good to go. We can also see this ribbon from the manager. That's already red going into that opening range. That gives us real good sense that we don't want to be taking so many pips here. What we want to be doing is using the manager to maximize the profits here. So traditionally with these breakout trades you would set a target of so many pips, 10 pips, 20 pips, whatever we want to do. But when we're using the manager and we get this confirmation here, we can stay in this trade until this ribbon turns green, which it has not done yet. However, if we are green, or we're in this situation where we're going green to red, we would dictate 20 pips, get out and walk away. But right now, this is what we call all the stars are aligned, okay? And it happens quite often. So what we're looking for is a break a couple of pips below that opening range with a stop just up above. You can see we got that here. We went a little bit flat and sideways, and then we got the London Open, and then there was another opportunity to add to our trade already. So again, the London Stock Exchange opened. We're all red on the BIAS Depth Heatmap. The range was defined. The range was red. It was larger than the European range, but hey, that happens, more volatility. Then what we do is, if we've not traded the European, we do the same thing here, 2 ticks below, take the short. If we've already in the trade with the European Open, we want to add. So we want to double down the amount that we're trading here and add to our position. And then all we're doing then is looking at the manager to understand when to get out, okay? So right now the ribbon is getting closer and closer. You see it's 4 candles in advance, if you like. So what's happening right now is it's thinking about going up. We see these dots below the candle. These are lower than average volume candles. So although we've run out of juice, we're pulling back up. We're pulling back up with lower than average volume. So we're not really panicking right now. The manager's saying stay in. Look at the BIAS Depth Heatmap. We're 3 levels green, 1 level neutral, 2 levels red. So right now it's that point where we should be locking in profits without a doubt, especially if we've got 2 entries. So we want to put in our trailing stop just after that second entry, so we're not losing any money and we're locking in some profits. And then we've just got to wait to see, because if this turns down, because this is lower than average volume, this could just be a little bit of a pullback. Okay, sorry about that, not going to edit it out, it's real life, getting my car serviced. Anyway, let's get back to this. So right now you see this low volume pullback has run out of juice and it's starting to come back down. Yes, it's got lower than average volume right now, but we are in a situation where the ribbon is still red, so we're waiting to see what happens. We're not panicking. We could almost now, if we get a lower low, lower high on this candle and another lower low, lower high on the next candle, we could put a very, very tight trailing stop just above this pivot here. We just got to wait a little while though, be patient. If, however, the ribbon turns green, then we just take our profits there. So this is a very, very simple strategy. Lots of work goes on behind the scenes on this trading strategy with the different indicators, but actually presented on the charts, very, very simple. This is European Open. We're on the 10-minute time frame, defines the range. It's bearish, we're only looking for the short because it colours the range in red. If it colours the range in yellow, it's neutral, we don't trade. If it colours it in green, we're looking for the long. It's very, very simple. We get the confirmation from the BIAS Depth Heatmap. All 6 time frames are red. This is good for a short. We go short, but we're going to be more conservative with that trade management strategy because the manager, the xBrat manager, the ribbon is already red when we're going into this trade. So we're just going to allow this to play out all the way down until the ribbon turns green, and this helps us maximize the profits from those trades. Hopefully that helps, and we'll speak to you all very soon.